special guest with us right now, IMF Managing Director, Kristalina Georgieva. Managing Director, good to see you again. Congrats on the new 5-year term.
Thank you very much.
Really enjoyed the panel. You just got off moments ago, and you talked a little bit, and you have been talking about this, the tepid 20s. For the average investor out there, or the average economist, what do you mean by that, and what should you expect in terms of growth in the tepid 20s?
What we have today is a world economy that has proven to be remarkably resilient. Just a year ago, we feared recession. That didn't happen. But we also have a historically slow growth projected over the next years. So if we don't take action to generate more impetus for growth, we are going to end up with a decade that is disappointing. Just to give you the perspective, before the pandemic, on average, the world would grow 3.8%. Now we project just slightly over 3%. And at the same time, the population on the planet has increased. The aspirations of people for better lives are there. They are not going to be met with such a disappointing growth. And this is why at the IMF we strongly recommend to turn attention to more growth-oriented fiscal policy, monetary policy, and of course recognizing that what would make the biggest difference is human capital and the foundation for a digital transformation, for a green transformation.
Can the US, let's focus on the US, can the US take those fiscal actions given the high levels of debt the country has?
But the US is in a very privileged position right now. It is because of high interest rates, strong dollar, and very strong economy, very attractive for financial flows. In fact, 1/3 of the money that moves around in this world comes to the United States. It was only 18% before the pandemic. Now, if in this condition, the US is still shy to take action to reduce debt when the economy is strong and when financial flows come this way, then when would it do it? And we believe that when we did a very careful analysis of the revenues of the United States and the spending in the United States, we identified plenty of steps that can be taken that are not affecting growth prospects. There are tax exemptions that are not growth enhancing that can be eliminated. And also on the spending side, the US is still spending as if it has youthful population that it had some decades ago. That has to be corrected.
I'm still pretty young.
Well, you are, but US as a whole, unfortunately, is aging. I mean, it is being helped by being still the most attractive place to live, so many young people are coming to the United States, but overall, fiscal policy in the United States really needs to take care of this because with interest rates so high, the burden of servicing debt is exceptionally high. Today, the federal government spends over 17% of its revenues just to service debt. In 2015, when interest rates were their lowest, they were spending less than 7%. That's a very massive increase, and it begs for action.
I need to get in your mind for a second, because we have former President Trump, who has floated 60% tariffs on Chinese goods. When you hear that, how bad would that be for U.S. growth?
Look, I mean, who is the president of the United States is the choice of the American people. And we are never commenting on policies that are not being announced. So we need to see what is the choice of the American people and then what policies are being put in practice that are in place. But what we need to remember in this context is that the reason the American people and people around the world have turned against globalization is very serious. It is that for quite some time we all would claim that because globalization lifts up incomes on average, it is good for everyone. No, it wasn't. We had communities that suffered the negative impacts of their jobs being wiped out without sufficient attention. And I actually think that for the future, it is, of course, the issue of how one manages trade and investments. We are in favor of a more integrated economy because it leads to better allocation of capital and higher incomes for everybody. But to do so, being mindful that if in society there is sense of unfairness of the economic story, then people will be on the street, and then we would see more push back on what has worked for us. I mean, just look at the last 30 years. The tremendous benefit for everybody from an integrated global economy. It would be really a tragedy if we are to lose it.
One of the things that U.S. consumers continue to have a problem dealing with is inflation. Now, we heard Chair Jerome Powell say last week he doesn't see stagflation. He sees inflation coming back down. Do you see stagflation? Why is inflation still high?
Well, the reason inflation is going sidewalk, not going down as it has been for some time, is it comes from the strength of the U.S. economy. The consumer is still pushing for goods, and that strength turns into a problem for Chair Powell. By the way, this is why it is important on the fiscal side to be more prudent, so the fiscal doesn't inject more risk of inflation staying here for longer. Let's remember that Chair Powell holds a lot of the capacity to cool inflation, but not all. What we see in the United States, very important factor is the repair of supply chains and the ability to meet this demand that is still quite strong. In our baseline, we expect to see inflation going down to target this year, and we expect to see the Fed starting to cut. But
Two cuts this year.
To cut this year, but it would depend on developments in the United States, and unfortunately, it also depends on developments outside of the United States. If we have geopolitics to push energy prices up, that would be very problematic for Chair Powell, but it would be problematic for everybody around the world.
Thank you for doing this. It was so nice to see you again. I know you're a very in-demand person here. We'll let you get back to the action. IMF Managing Director, Kristalina Georgieva, good to see you again. We appreciate it.
Great to see you.